Check, check. Welcome in, everybody. How are we doing? Hopefully everybody had a good weekend. Give it 1 or 2 more minutes. Pretty low attendance tonight. We'll see if any more people trickle in. I will start writing down these names though. JJ, good to have you in here. Oh, weekend was busy. Weekend was busy doing some side projects on the computer. Still trying to get everything moved in my new vehicle, and just realized that Chipotle charges $3 for guacamole, so I'm not super happy right now. I never go to Chipotle, and I had to get something to eat real quick. $3 for a big old spoon of guac. Other than that, I'm good. How was your weekend, JJ? Hopefully good. Well, shoot, we only got 13 people in here and only 2 people wanted to request, so um guess might be able to excuse me, get some really detailed analysis for you guys and some stuff you're looking at. Ooh, Boeing, haven't played that one in a while. Nice one. Definitely take a look at that. Bearish. NBA. All right, guys. I'm gonna get started here. We'll let people trickle in, and they'll probably ask, did we already go over SPY and QQQ because they were late? But that's that. I'll definitely do a recap at the end. So, there's a lot to go over, a lot to talk about. If this holds at the open, we are going to be opening to a large gap down. So, if you swung puts, you're probably going to get paid. If you swung calls and they expire tomorrow, they're worthless. Do not average them down, just cut it for a loss. Yeah, I'm being serious about that. Just take your loss because that'll be a big gap down. So a lot of people do on a Friday, I don't know why, but they'll swing Monday calls or puts, and you essentially need a gap up or gap down to offset that theta burn on the weekend. So yeah, large gap down. Again, the tariff news, with the United States and Mexico and Canada is leading the way. It's leading the news, the news cycle that is, and it's spooking the markets, because that, I think, if I'm correct, my opinion is very inflationary. Everything's going to go up, but people just say, "Oh, we'll buy American," but it's like, well, it's not that easy. It's not that quick. Everything you touch is probably made in a different country. Everything, and so just something to look at here, you guys. Futures, like I said, they're down pretty bad. So again, stuff is probably going to be gap down almost everything, but I'll try and give you guys some analysis on how I would trade it with where we closed Friday, some levels to look at underneath, because I'm not going to know where everything is at as of now, individual names, but we'll try our best, you guys, and we'll try and make a good class out of this. So with that, SPY and QQQ first. It's down there. So some things to look at here, you guys. I think the most important thing is, or the most important thing I want you guys to get out of this when we have large gap downs like this is when I always talk about supports making resistances, resistance is now making support, so to speak. And so basically, when we sell through these supports, they're now resistance levels. And the easiest way to kind of get our bearings on, where we want to go, how we might want to trade this is to look, overhead, and either short a balance or, like I always say, if you don't want to, if you're afraid, and rightfully so, to take, puts down here, you can let sellers take their turn into a next big level here. So we are opening under that huge, 600 was really big. We're going to be opening under that. Excuse me. The big one I've been talking about for several weeks, you guys, I think you should have on your chart. It can vary, a few pennies here and there, but this line basically down the middle, this 595.43 on SPY, we can see, the nice trend we get over it and then under it, and we are now under that. And so again, I'm not saying just play right at the open, but if we start trickling into this zone this week, I think that's a good short opportunity because a lot of people say, yeah, the markets are going up, take puts here, and it has to make sense. And so for me, this big zone here is the spot to watch this week. Yeah, we're like $4 away from it, but excuse me one second. It's that damn $3 guacamole. We are $4 underneath it right now, but this is one of those things where like I will just I will set an alert, and I'm actually probably gonna do that now just for a reminder to come back here on this zone here because I want to see our reaction up there. So again, maybe we get this move and we push back up to it tomorrow. Maybe it's 4 days, maybe it's a week from now, but that's a level to watch that again, an old support is now resistance, and it's a very, very big level because we see when we reject under it how the selling pressure ensues when we reject under that. So that's the first level to watch for me. If we kind of open down into here again, I think our first line of defense is something to watch down in here, this 590, this 590.15. And to me, it makes sense with that wick pre-market from last week. And then also this price action here. Does that kind of make sense to everybody that may be newer to charting or need help with charting, stuff like that, on why we do things the way we do? Again, I'm on the 4-hour chart. So each one of these candles is 4 hours worth of information. So that is a lot of information, a lot of data, a very good way to find your key levels. And so we can see how the price action kind of moves and reacts around it. Again, it's this line here. Draw it thicker for you guys. But for me, that's kind of my game plan. I'm going to see where we open, how we open pre-market, and then I'm just going to set an alert right here down here to remind myself, hey, this is a big support. Don't be holding puts or taking puts in here, and I'll remind people as well, in the chat. Does that kind of make sense, and kind of how to sort of build a game plan on SPY tomorrow? Again, if you're in puts, sell them, go back to bed, pat yourself on the back for swinging puts because they're going to be up huge. So again, if you're in something, wherever we close, if you're into like 603s, you're now $13 out of the money on that loss. So again, you guys maybe just joined a little bit late. Don't average down on something that expires this week. Like that's just foolish. Like, because you're so far out of the money and data's gonna be working against you. If you got SPY calls that expire tomorrow, just cut it and move on. It sucks. You're gonna take a big loss, but that's the way it is. That's the risk you take when you swing. Okay. QQQ. Same thing. I like this one better. It's easier for me. I think you guys see why. Let's look at that 511.45. Again, you guys take a screenshot, write it down if you're charting along with me, alongside me. 511.45. Look at that reaction there each time we get into that zone there. Oops, drawing to it. There we go. See this reaction here? And we're going to open, I hope we open somewhere around it, because if we push up and reject, that's a very good, a very safe short opportunity. Let me pull it in a little bit, zoom in for you guys. Oops, a little too much. But we can see this reaction here. So if we gap under a support, and back to my drawings, we gap under, we open under, we push up, and we're rejecting brick wall, overhead ceiling, overhead resistance, that is, excuse me. It lines perfectly up with that. If we start rejecting that, that is a safe entry on puts for some 511 puts, maybe some 510 puts. Okay. If we push up and we break over, you cut your puts and you look for what I always say in my tab or in lectures, a breakout retest. So, we break out, we push, you don't buy the top of the candle. So like, this is our candle, it's gonna be ugly. If someone bought calls right here, they're literally trimming here and you're buying their sells. Okay. You wait for the push, you get the retest because now resistance has flipped support. You take your calls there for a hopeful partial gap fill or full gap fill. I don't know, that'd be a massive day, but we've seen crazy things in the market. Okay, so QQQ is slightly easier to trade, you guys, and it's a little more defined because it's only big tech. It's not the S&P 500 that has a little of everything in it. So this is just big tech. So again, you guys, 511.45 is the level to watch for me. And again, if we were to go to, like a 5-minute time frame, there's obviously a lot of levels in between here that we can play and could play, but this is just, a larger time frame analysis on my game plan and how I would trade this. Does anybody have any questions on QQQ? Anything at all? Really, really nice chart, you guys. And I like this because there's gonna be FOMO of people that didn't swing puts, but this right here, where this opens, this is gonna be nice for us tomorrow if we open around there. Let's hope we do. All right, no questions. Perfect. We're gonna get to the watch list. That's why you guys are here. First one. Oops. Lockheed Martin, Warstock. Let's go to the daily because I haven't charted this one in a while, or I haven't seen this one requested in a while. Get you a game plan here, and we'll take it from there. So first things first, let's find some levels to chart on. I'm on the daily. The user that requests this, and what I'm looking for is candle body closes. I'm looking for top side and bottom side wicks, and I'm building a game plan from that, starting at the daily. You can do the 4 hours as well. So first things first, I want to grab this here. I'm grabbing that large wick buyback there, big buyback there, and a big buyback back over it. Okay, does that kind of make sense on that first line chart, how we chart, how I would do this? Okay, next one is, oh, I'm not in drawing mode anymore, is this little zone here, because what I always talk about, breakout retests or breakdown retests, that's kind of what we're getting right here on this. So again, I'm on the daily. We see that we've sold through a support. This last lower range support, we bounced very, very hard. If it doesn't make sense, I always say, look left, look at those bounces there. Okay, so we sold down into it, boom, buy orders triggered, big bounce back. Okay, so now we are selling through and we're retesting an old support. So a breakdown retest. Now you watch this 463.45-ish, and you decide there, you watch the price action tomorrow. So you go to a smaller time frame tomorrow, 15-minute, maybe the 30-minute, and you kind of watch some price action around there. We break over that, and we're going to leg up for the next target zone. I'm not saying it's going to go to 471 in a day, but if you're like swinging or you have long dated calls, that's kind of how you play this. Okay, why do we take calls on the reclaim there? Well, fairly easy. If you look left here, big reclaim that support zone there. And you can see when it reclaims that zone, what does it do? It trends up and it goes to the next was support, now resistance zone. So very, very nice, clean chart. I'm not going to say easy to trade, but easier to trade. If we go to the 30-minute, and we can kind of see that price action, how we play that as well. So short term, higher lows are being set. So again, you want to see this trend up. This is our hourly 20. You want to see this keep it underneath. VWAP, EMAs, all that stuff. You want to see those trickle underneath, and you want to see a push up, retest, take your calls, because your risk is kind of this pocket here on these candles. That's what you're risking on your calls for a loss. Meaning, if we trickle down into here, you guys can't be fearful when you get into a trade. You cannot enter here and see, it could come down to here. That's a 10 or 12% loss, and you can't be scared and go, oh, it's red, I'm going to sell. Like, you guys are panic selling because you're in it. You're for probably 3 reasons. One is you don't have a game plan, meaning you didn't chart. 2, you're probably in too heavy, and 3, just in general, you probably have no plan. So if you enter this and you have this chart out already, you got to be able to see some red and a little bit chop there and bounce back up, and then boom, payday. Okay, that's how I trade this. On the reversal side, you did mention you want to be bullish on, or trying to be. 463.45 is a spot to watch. So any opens under it, just watch that reaction there. Again, this is resistance until it's not, because we can see it rejected. After we sold through that support over here, first attempt to break back over, rejection. Okay, so for me, my first instinct is watch it, be patient, because guess what? It rejected Friday. It may very well reject again tomorrow if we get up there. Or if this solid body holds, we're going to open somewhere down here. And to me, you stay short under that low on Friday, and you can just write some puts down into here. If you don't like buying puts, let them take their turn. send alert down here and try some calls on the bounce. Okay, you may look at down candles, or you may say, well, why, it's going down, why am I buying calls? Well, you're buying calls for a hopeful triple bottom on the daily, 1, 2, 3 days, triple bottom on the daily, a call bounce. Okay, you don't take puts here, hold, and don't sell any, and then it bounces up, and now you're back to break even. Okay, you buy calls at support, you buy puts at resistance. Pretty nice chart. Nice request. MicroStrategy is getting whacked if this holds. Errol. As of now, it's in a world of hurt in the morning, but let's go larger time frame for you, and kind of just see if we can find anything that makes sense on where to buy the dip from. This is from a day trade perspective, you guys. All these names are. So if you're looking for a swing, please tell me in the chat. Otherwise, I'm going to treat these as day trade setups and day trade charts. What you want to do, again, I'm on the 4-hour now, and I see some levels here where I'm looking right here. Oops. And why did I grab that? Large wick bounce, wick on the bottom side bounce. Let me get a couple overhead resistance zones here. But it's going to open kind of in a really nice spot. So we still have a gap here that's not from earnings. I'm not sure what that gap is. Maybe just a big election day gap up or overnight. Okay, so again, kind of a, it's going to be blood in the morning. It's going to be wrecked. But that 299.71, basically 300, Errol. If you can see, hopefully I'm pronouncing your name correctly. If you can see any bounces there, again, you gotta have that mental toughness mindset of, okay, markets are going down. Why am I buying here? Same thing. When you want to buy puts when it's going, or calls when it's going down, it has to make sense. Same thing where people are like, puts here, on an uptrend, it's like, it's got to make sense. So any opens and bounces around here, I like the shot to try it. And so what's probably going to happen if they open right around here, two things are going to happen, or several things can happen, but either a bounce and a really hard bounce and they probably don't look back, or what a lot of things will happen is there's gonna be a lot of orders, a lot of activity, a lot of volume here. There's gonna be a lot of fake out action, like maybe a big red candle down. My candles are white for down, but a big red candle, and then people will be diving in puts, and then boom, they're gonna buy it back up, and then they might launch it. So definitely a spot here to watch. I kind of like that stuff as well. I don't trade this name, but if you're going to try a dip buy or try the bounce, that 300 is a spot to try. But any sells under and rejections under and super weak market, you cut your calls or you just sit out if you don't like taking puts. But very nice spot there. JJ, just getting caught up with the chat. Do you think this year might be touchy and tough? I do. I was just talking to River about this before I signed on. I don't think the markets are just going to be in a straight up trajectory. I think when we talk about chopping and ranging, if we were to go to the SPY daily, I'm not a fortune teller, but I think we're going to hang out in a very large range again. I don't think it's just going to be up for us. It's going to be very, very data dependent, news dependent. Obviously, Trump, when he tweets and holds press conferences and stuff like that, we know how, his words move the market. And so I think we're going to kind of range into here. I would like some selling, but selling, well, usually all selling does make sense when it sells. I don't know why I said that, but I want to see some sell, some hard sell into here. And then, I'm saving some gunpowder for sure. I'm saving some money in my Roth IRA, definitely to buy some dips. Just whenever we push up here, just like everyone else, or maybe some people don't care, but I don't want to be the first one to buy at 610. If I were to start my investment today, I know it's a long-term game, but still, I don't want to be the first one to buy it. And so I'm looking for some dips into here. would really love down in that 590, this old all-time high zone. Man, if we get that this week, this 585, absolutely. Some call swings with time. But to answer your question, I think it's going to be a lot of back and forth action. We're going to have some really good days, really good weeks, and then we're going to have some sell, sell, sell. And it's going to catch people off guard or no stops, stuff like that. And so it's going to be tricky, especially with this tariff news. If it goes through, it sounds like it's going to go through. But any hints on, Canada or Mexico like folding and accepting whatever, and the tariffs are lifted, like we're going to rock it 3% day, huge days, and so it's going to be tricky, you guys. Just, you got to play smart, got to play day to day, or just buy like Tilio. When you see his alerts on his options tab, like he's buying June contracts, and you have to look at that and say, why is he buying June contracts? He trusts the name, he trusts the setup and his thesis, but he's saying, I don't want to be right or today or tomorrow or in 6 days. I have June contracts, and if it works out for me in 6 days, fine, I'll sell them. But he's buying that time for safety. That is his insurance premium he's paying. It literally, the premium is costly because he is buying the time for protection. Okay. PANW. And then I'm going to skip your next one because I want to get to everybody else. I'll roll back. Username R. Did we talk about this one last week? I know we charted this one last week. Bearish. Love it. I think I can find a bearish setup for you. Someone requested this last week. Maybe that's okay if it was, because we got a couple more lines we can nab here. All right. So some things to focus on here, if you're still in the chat, hopefully you are, is overhead zone, overhead rejections. Why are we rejecting, where to reject and why to reject there. So again, old resistance was support, support, support. Now resistance. Pushed up, candle body closed. That was probably like Monday or whatever last week. Closed right at it. Next day, a daily close over, which is good. People probably thought the breakout was for real. Of course, this in hindsight, and then boom, big engulfing candle, almost, didn't take the top wicks, but huge sell down candle, bearish candle there. Again, retest again, rejection, opened here, rejection again. And now I'm going to zoom in a little bit so you can get a better play on this. Let me watch the chat. Yes. All right, cool. So again, I would like to think that candle is accurate with the way the markets are right now. So how I would play this is there's several bearish things to be bearish on with this setup. So I always talk about it. Purple line is the 9. Green line is the 20 moving average. Okay, this green line here. So we are now going to open under it, which is a form of resistance. We're opening under this old support, now resistance. And so, pretty easy setup here for me. If I were to play this, I would set some alerts somewhere up here, username R, and, wait for some bounces up here and short that, because you expect to see the moving average reject. You expect to see that reject, this zone reject, this zone. Okay, they break over. Same thing as almost every ticker, get bullish on it. Okay, or any opens under this daily 20, because it's going to line up with that wick. It's going to line up with that price action. You can short here, basically, probably 181. Or we open down here. That's a big sell down. It gets a little risky, getting overextended. You can ride, look for a trend down. If these moving averages keep falling down, the hourly 20 catches up and they just keep pushing down all day, ride that trend down. Okay. No reason to try and just buy calls randomly for the heck of it, trying to get a bounce here. Just ride that trend down. If the market is super weak tomorrow, and just trim. And then when you get to big support, you be smart and you take some calls, or you sell out of all your puts and just roll through it. Okay. Nice setup. Again, you guys, a lot of stuff is going to gap down. So I apologize to kind of sound repetitive, but that's just how it is. It's our Sunday class and we're going to roll with it. Okay. Sorry, I'm just trying to get one request from everybody, you guys. Username CCSMH, that is semiconductors. Again, probably going to get whacked again on this, but some nice things here I see immediately. Let's go to the 4-hour chart, you guys. We don't get to talk about that yellow line much because a lot of the names are just pushing and moving fast from the bullish market recently. But that dash line is the 200-day moving average. Okay, if you're a share buyer, generally speaking, you know, if you're over the 200-day moving average, you're doing good. You're in an uptrend somewhat, you know, and you know it is a good long-term tool to use, or moving average to use, that is. So we can see this price reaction around the daily 200 and all those bounces up. Daily 200 bounce up, daily 200 sell through, again push up, reclaim, and now we're gapping under it. So the perspective changes just a little bit. This is again a semiconductor ETF. You know, your AMDs, your NVIDIAs, I don't know exactly what names are in there, but with some sell down here, we got to start thinking, okay, do we buy the dip? Yes or no? When do we do it to make it make sense? Okay. We can definitely buy the dip, or if you guys are some share buyers, you can buy some shares with caution. But again, a one-line chart here, we can kind of see 233.42 CC, kind of that zone to watch there. And we're going to see if we open there tomorrow, but we can see that reaction there when we get there on how important it is to watch on the larger time frames. Always build a plan. Never going to do a trade without a plan. Okay, a zoomed in look because I want to kind of show you, you know, buy the dip, but be mindful of a lot of overhead resistance, you know, what's happening. So clear trend break, and now we have 3 moving averages, 9, 20, and 200 stacked overhead. So this one is going to move very slow because it's a 200-day moving average. The 200 days is the average, and these are going to move faster. So any bounces here, again, buy calls where it makes sense. This is a level that makes sense. Buy some calls, and let's just say hypothetically we get some good news out of the market and we just rock it for a couple of days. Okay, so we push up, you look left, you trim at these big zones here. See these? When I say big zones, you see these big movements on candles. You look at that in large time frames and you trim. Okay, and now we're up to here. So what's going to happen? Say you don't have any lines charted out. These moving averages are going to be something like this. I have no idea. Depends how fast we get up there. So these moving averages are also a form of support resistance. So if you're up here and you're not trimming and we start rejecting, I know I'm going through the after hours, it's just for illustration purposes. If we push up tomorrow, just say we just have a huge bullish day, we push up, you know, 13 bucks, and now you don't sell and we start rejecting, you're like, why are we rejecting here? It doesn't make sense. This daily 200 is going to come into play. So you guys always have a plan. If you don't have Thinkorswim and you're not able to plot this out like this intraday, you at least have to go the daily 200 and say, okay, or excuse me, you have to go the daily chart and look where the daily 200 is and go, okay, it's basically at 245. I'm going to mark that level on my chart on an intraday level on the 5-minute or 15 and find out where it's at, because that is overhead resistance. All these moving averages overhead. If and when we do push, pay attention to that. Okay. Any sells down to be bearish, got to sell through this. I'm not taking puts right here when I watched that reaction from last week. No way I'm buying puts here at 233.42. Okay. Need a sell through support to show that buyers are giving up and sellers are in control. A sell through those lows from last week. Okay. Even if we sell through here, you don't be cheering on some puts and then go, man, we bounced really hard. Why did we bounce there? You bounced those lows from last week. Okay. Pre-market high low, previous day high low, previous week high low. Those are the bread and butter to find targets on any chart. Okay. Nice request so far, you guys. Again, I'm just going through the levels in order. Trying to get everybody one request. Not skipping guys on purpose. David, you're up. TEM or BDX. I don't know either of them. I'm going to grab, oops, I'm going to get out of drawing mode. I'm going to grab TEM because I've never done it, I don't think. Tempest AI, interesting. Ooh, big breakout. Well, someone requested it because we got some lines here. That's kind of cool. We got some lines down here. So someone back in early January requested it. Maybe it's you, maybe it's Norman. He likes these AI names. Some things to watch here. Clear, you know, like a bull flag breakout price action kind of thing here. So for me, instantly, I'm going to look left a little bit here, and I'm going to find some levels for a breakout retest of what makes sense and see if we can find something for you here. Yeah, definitely that zone there for sure. Top side, why are we rejecting here? Let's see if that makes sense. Grabbing that wick right there, that wick there. The bottom side, that wick reaction was a huge bounce, and it makes sense there. So hang with me, guys. I'm going to zoom in now just to get you guys a game plan on how to trade this. And again, I'm going to treat these all as a day trade, not a swing or a share position. So if you want it, let me know. But definitely, David, absolutely, you try the dip into here. And again, your risk is small. So basically, if I were to zoom in more, oh, dang it, failing. Let me see if I can move that back. All right. So basically, if you were to buy calls there, you're looking at these candle body wicks, or at least this is how I trade, you guys. So I circled that. I'm going to delete that just so you can see it better. So those bottom side wicks is basically your stop loss. So you take calls at support. Again, you got to be able to stomach a little bit of red. You can't just see 5 or 6% red and freak out. And you cut your calls. It's not a very good drawing at those bounce zones there from Thursday. And then guess what? We bounce and you go, damn it, why did I sell? Now it's up 40%. Okay. You guys have to have a plan. So for me, try your calls here, expect to see a little bit of red, but if they bounce it just like this, you should not be fearful. You should be confident or at least hopeful that they'll bounce it again. Market doesn't care about our feelings, what we want. But my point is, I look for repeat setups, repeat patterns. And so something like this, I would absolutely take a call try there at 56.41-ish, and then down to basically 56 flat. Okay. So if we sell through 56, I'm getting bearish for the day because we can see we kind of sell through 56, what the price action we kind of get. Okay. We reject this zone, price action that we kind of get, but we hold it, price action we get. So that's kind of the setup, how I would treat this on a day trade setup. What we would do, falling wedge on the 15. Yeah, I mean, I'm not gonna say no. I usually like a little bit longer time frame for stuff like that, but it's not clean. I mean, it's not super clean. I would, I would treat it more as a breakout retest setup. I'm not saying you're wrong, but don't, because if we skip this wick here, we're kind of, I'm not saying making it up, but I'd have to grab those 2 wicks there. So I guess you could kind of call that. But for me, it's my bread and butter. It's a breakout retest, what I'm trying. So a breakout of support, hopeful that it holds. You get your retest and boom, you take it to 58.37. You hold 1 because that's probably going to reject pretty damn hard, just like that on Thursday. If we break out, boom, you ride it to Friday's high. But regardless, always have a plan either way. Okay. Because the market doesn't care if you're on a hot streak and you're up huge, or if you've been losing for 6 months or 6 years. Like, you have to have a plan. Right. Get caught on the chat. Ricky, good to have you in here. Joseph, IO in Q. Is that a form of, what is that? Is that just what it is? Or is that like a leverage thing? Yeah, David, good stuff. Good request. This one is laying flat here. What is this guy doing? A lot of consolidation. Joseph, consolidation leads to a breakout or breakdown and a big continuous move. So when I say consolidation, I am looking at this right here, guys. Like, 2.5 buck range, that's some tight price action. Okay. Buyers are not winning, breakouts are failing. Sellers are not winning, breakdowns are failing. Okay. This is the 4-hour chart. So yeah, you could have taken puts and maybe secured down here, but guess what? Ultimately, buy back into the range in this little pocket here. So very interesting on this name here. Delete this for now, but big move setting up. I can't say sellers really have the upper hand. They have a slight upper hand because they're rejecting this top range and they have 2 moving averages overhead. You can see them stacked here. So I would say sellers have the slight edge, but again, very, very slight because, big bounce zone reactions down here. And again, top zone rejections continue to be rejected, basically right there. And the moving average is stacked. And so this is a range. This is only day trade material for this name. I don't know if you're looking at shares or swings or whatever, but definitely day trade. Take your calls here, take your puts here. Because, again, you may want the breakout to happen, but it's like calls paid, calls might pay. Guess what? Puts paid 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. You get the point. All these days, if you short that, you're getting paid on those retracements, all the way down. So if you don't like this range, or if you're looking for a share play, absolutely send an alert basically over 41 just to check that price action. Because you're now, if that starts to hold, you got your 2 moving average underneath that are going to curl for you for a nice swing trade potential. Or set your alerts down here, get your bounce or any sells down here. Okay. If that sell holds, you got to start looking left. Price action down here. Get these candle bodies down here. Okay. If you're late to the puts, don't be late. Don't be chasing down here. You take your puts when we sell through support because your risk is small. Nice setups, you guys. Very nice. JJ wants Apple. We can do Apple for sure. I got some good lines going. All right. Apple is going to be a fun one tomorrow. A couple things I see here immediately. I'm on the 4-hour chart just to give you guys perspective where the heck we're at. And if you guys know anything about my moving averages and big support lines, let's look at that 230 for a second here. Think that 230 is going to matter tomorrow? Well, I'm going to go to a smaller time frame in a second, but let's just look at that 230 level. I want to see exactly kind of where this after hours candle is holding, but look at that reaction there when we get around 230. Big bounces when they want to buy it. But again, the market's got to be ready for it. Huge bounce there. If you caught that, was that Monday or Tuesday last week? We opened there right at 230. That's a blessing. Look at that Dan Apple. Okay. Smaller time frame. How do we trade this? I'm on the 30-minute. I don't play the open on anything, but if I were a betting man, I'm taking calls at 230 every single time. But again, you got to have a plan. How much risk do you want? Because it's going to be very volatile in the morning because of the gap down, because of the news, and it's at a big support. So there's going to be a ton of orders right here flying around at 230, and you're going to have to see who wins. But if we bounce that 230, look left. What do we have creeping up? Our daily 9 moving average is going to be stacked basically right there. That's a double support, double strength, whatever you want to call it. Absolutely. I'm not taking puts at 230 until I see a sell and market sentiment to follow. Does that make sense, JJ? Again, longer time frame analysis, building a game plan on a shorter time frame. So anything over 230 or maybe bounce a double bottom, you missed that, first 15 minutes, or you had to work, or you overslept, whatever, you don't like trading the open. We start double bottoming down here. Absolutely, take your shot off 230. But any sells under and rejections at 230, markets are super weak. Nvidia's selling, everyone's selling. Take your shorts there. Sell through because your risk is small. But Apple, you guys should mark Apple right on our watch list, or mark this level tomorrow, 230. Very nice level, you guys. Sometimes we're looking at some ugly charts on the gaps on some of these other names, but Apple, that's a very, very easy in the way that it's an easy way to create bias in a game plan, in a trade plan, because of that 230 level. Very nice. All right. All right. Single requests are caught up. Circling back. Boeing, if you're still here, let's do it. I think we've done this one. I don't remember the last time we did this one. Back to the 4 hour. Let's find our game plan. Ooh, got a couple things I see right away. Let me get rid of this sidebar, give us some more room. So a sell through, kind of, sort of what I like to call like a structure break. So like a last minute, last chance support here. Boeing, you want to be bullish or possibly bullish. Okay. So we sold through that 173.4. Again, this is quick charting, but I'm grabbing these wicks here. Wick, candle body sell through. We sold through it. So let's see if that holds tomorrow pre-market. We gotta build a plan off that. So if we give up a support, our daily 9 is overhead. We gave that up. Our daily 20 is now going to be stacked pretty much right there. So wait, before I get to some drawings, let me get another couple of lines here for you. And again, this is a larger time frame. We can zoom in and get more detailed, but for speed of class, I just want to get some levels for everybody here. So I'm gonna grab bottom of the range. So if you guys don't know what I mean by that, when I say bottom of the range, this is a little bit of a range price action here, and this is literally the bottom. Okay, bottom zone. Bottom zone gives out, sell pressure, sell pressure, sell pressure. Bottom zone, support reclaimed, buying. Okay, top zone, we have sold through that, and our daily 20 is now stacked. So I'm treating 173.4 as resistance, and I'm looking either at 171.43. Again, quick charting, but that wick where it's stopping, look at where those candle bodies are closing, you guys. Again, that is the beauty of larger time frame charting. You know, if you notice, every chart, I don't start on the 5 minute. I'm starting on the daily, the 4 hour, whatever it is, and I'm looking for all this price action here and building a plan. Does that make sense, everybody? Hopefully. So I'm going to try and buy some calls here, or if we gap under, you take your puts and you short down to this level here, and you absolutely sell at, again, you guys, the bottom of the range. And also, what do we have creeping below us? That yellow line, daily 200. If that lines up, and you know, say we sell, smack calls there, absolutely. Basically 169, it's going to line up with that. It's going to line up with that. Okay, very nice zone here, very nice range to try and play off of. 171.43 if you want to be bullish for a day trade. Swing calls, this is no zone for me until you break over, or we consolidate down here and we prove that buyers are holding the zone, and you take some swings with time. But on a gap down day, that's not where I'm entering some call swings. I want to see buyers, you know, investors, whatever it is, proving that, hey, this support's going to hold, or this one, or whatever it is. Or if we push up, I want to see a break and hold of this, and then get some calls, swings, that is. All right, just checking, making sure I'm getting caught up with everybody. What do we got? 15 minutes. Let's see if there's any more repeats in here. I'm trying not to miss anybody, I promise. I'm trying to scroll. The chat doesn't like auto scroll, so you gotta go back and forth. Oh, Dell, TSM, Amazon. Okay, let's hit Dell and Amazon, because I know Amazon is big tech. A lot of people like it. So Dell first. Oh, I charted that out for someone, or maybe I don't know what that was, but we got some levels up there, but we need to start catching some. This thing is getting knocked down, kicked down, beat up, no love. Basically, since that November earnings, that was probably earnings in November. So a couple of things here. Very nice, clean, like structured chart, like trend lines down, makes sense. Topside rejections. And I don't like to skip wicks just to try and make it work, but I spoke too soon. But clear downtrend, again, 4-hour chart. Let's get some levels for you here. Why do we stop here, or why do we stop here after hours? That's the lows from the week, and that absolutely makes sense with that zone there. So let me grab one more downside. Bearish levels. Okay, yep. Let's get you a bearish plan and how to trade that, or how to trade this name. So, and again, you guys, I know I'm scrubbing through these fairly quick. So if you feel like something doesn't make sense or something, just send me a DM this week, and we can kind of go over something, a better detailed plan. Like I said, I don't want to spend 30 minutes on each name. So looking left, you guys, real quick, I'm watching this top range price action rejection here, basically 101 flat. That would be my focus this week if I'm playing this name. So basically, again, my bread and butter, a breakdown retest is what I want to see. So if we open here at support, I'm not buying puts at 100, because why do we not do that? It's a round psychological number. Like 100 is as sexy as they come. 99 is nice, 101 is nice, but 100, ooh, that's a nice round number. 100 flat, 95, 96, whatever it is. You never want to take, if we're trending down into it, you never want to take puts. If we're pushing up to it, like SPY 600, you never want to take calls at 600. Okay, like a round number, a psychological number. Okay, so my plan for this is, you mentioned bearish, so again, breakdown retest at 101, because your risk is small. You have that candle body close there. I would basically use these candle bodies here as my stop out. So basically I would draw a line here and extend it, and I would say, okay, I'm buying puts here. I'm willing to hold as long as I have time. It's not like a 1 day till expiration. I'm willing to hold to see if that rejects. We'll just call it 101.50 for speed of the class. Okay. If we reject, all right, awesome. You sell through. Again, I know I'm drawing through the after hours levels. This is just for speed of class. So what we do and how we build a game plan is, you watch this price action on Monday and you said, okay, pre-market, we opened here, we bounced there. 1K says short the retest. We did that. I'm up big. Now I'm back to 100. What do I do? You trim heavy. For me, I would probably sell everything. If I buy a 100 strike put at 101 and I get a full $1 move, that's your full delta right there. If you guys understand option Greeks, that's going to pay you huge. And it's basically, I'm not saying it's paying you max profit, but in that $1 move right there, that's paying you huge. And so for me, if I was in 5, I would probably sell everything and just watch a breakdown and get a reentry and do the same thing. So breakdown, retest, and you short again. Or say you got some April contracts, sell 3 of them. We come down here the next day, sell 1 more. We come down, it's not going to work that easy. Maybe it will next day. Boom. Now we're at the bottom of the range. Now, if you have time, you have to start thinking, okay, I just made 150% on this. I should be happy. I should not be greedy, because we're coming into a huge support. So very nice range here. But again, recent price action, if you want to short this, be bearish, you look to these candle body reactions there, and you just short all the way down. Or wait for the break under. Yeah, short it. But any bounces over, don't just like take puts, take an average, take puts, take an average. No, take calls off support, ride your calls, and then what? We get to resistance, then you short it. You guys, we are day traders, or most of us are. We trade options, not shares. Some of us do shares. Like we should be able to flip back and forth. Like if this was the only ticker in the market to trade, like we're so obsessed with SPY. If Dell was the only thing in the market, literally the only thing we could trade, calls and puts all day long in our range. Find your range, find your levels, and trade it back and forth. Don't be married to a trade not wanting to accept a loss, when it goes against you. Calls on support, puts a resistance every single time. All right. Amazon. Ooh. Amazon is defending this nice pocket here. Let's check on the daily, see what that looks like. Actually, I kind of like intraday price action. So a quick zoom out. Where are we bouncing? Why are we bouncing? Doesn't make sense. Quick drink of water for me. Just look at that 231. So Amazon tomorrow, if you guys request this, that basically at 231.2. So if we just look back in history, look back in price action, this top line here, 231.2. So we push up, we reject, push up, reject, get over it, push up, reject. Okay. We sell. So this is what I would point out, this price action here, because this is essentially what we're going to open to tomorrow. Now, I'm not saying we're going to do this, but I'm saying watch this price action based off this. So last December 18th, not last week, sorry, December 18th. So my point is, we opened around this 232.2. We pushed up, we failed, and we sold. What did that do? That triggered the sell because they gave up. Buyers gave up here. So that's my point. Sorry if I'm making you guys dizzy. Same thing here. So now we're present day. This is tomorrow. So if we open here at 232, that is what we need to watch. Do we push up and reject and we sell through? That's your trigger to get short, but not until then. Okay. You do not buy puts at support. Only when support gives out and we get really weak on the day or weak on the market, whatever it is. Or maybe, some stuff are sideways and pushing, but Amazon is just a weak day. That's fine. We give up that 231. Take it down here. Take it down here. Obviously, again, like I always say every week, don't just because I only got 3 lines drawn here, don't hold until 230. You should absolutely be trimming on the way down. So if I were to go intraday time frame, we can see, hopefully it doesn't prove me wrong. We can see, oops, sorry about that, a lot of price action, 5, 15 minute, whatever it is, 30 minute. Once we give up that 232, for me, if you guys see my charts, I always have a 5-minute chart on top and like a 30 or 1 hour on the bottom. 5 minutes for entry, 30 minutes for my targets. Okay. We sell through 230 hypothetically, since you mentioned bearish, and you start looking left, find your targets, find these candle body closes, mark them out. Like literally in my alerts too, if you see the stuff I post, instead of like marking a bajillion lines on my chart, I literally just do this with alerts. And I get into my trade, say I'm in puts, say alerted puts on Amazon. I literally alert under 232 and I set this, boom, target 1, wait for it to trigger. That's literally what I do when I trade, you guys, because I don't like to muddy my charts up too much, with a bunch of lines on the 5-minute. I find larger time frame, I find some targets that make sense, and boom, they trigger, and I alert the, target 1 here for you guys or whatever it is. Okay. So that 231 has to sell through. Any holds over, I would expect buyers are going to try and fill some of this gap here. Maybe they get some of it, maybe they get none of it, but push up to there, basically 234, probably it lines up. If we get a bounce here, again, I know you mentioned bearish, but if we get a bounce, you absolutely better be trimming on that Thursday low zone there. I mean, not the low, but that Thursday candle body. Okay, because that was a sell through and a bounce back. You got to pay attention why that bounced there. Amazon, very nice chart. We're doing great on time, guys. I appreciate you all. Guess what? It's a recap. So maybe you guys joined late. Again, we are going to open to some serious blood and fear in the market. But again, I'm on the 30-minute chart here, guys. My game plan tomorrow. Hopefully, we open, kind of somewhere around here. Because to me, I would rather see an open here and some, I don't play the open, like I said, I would rather see some movement down here. Maybe we take some puts, and then I can get some price action, build a plan here. Because I don't trade the opening 5-minute candle. So I don't want us to open here and then that risk of just boom, calls it open first 5 minutes of the day, Monday morning, and then boom, I take a loss right away. I don't like to start my week like that. So for me, I want to see, hopefully we open somewhere around 592. So we push up, what do we do? We're going to start filling the gap. How do we play that? You trim on the way up. There's probably a lot of targets in between here. You trim heavy here. And again, you guys that were at the beginning of my class, the daily 20 is going to be stacked overhead in a huge resistance here. 545, 595.43 is overhead. So we join flips and voice chat. We take calls. You better have a plan. He has a plan as well. But if we get back up to here, I'll tell you what, I don't care if anybody else in the voice chat is not trimming. I'm trimming heavy there, and I might even short that. Okay. They sell through it. You missed on puts. Don't be late to the put party, like I say, because that 590 to 590.15 pocket, that is a big support, you guys. So you catch your puts, absolutely. You sell, then you take your damn screenshot and you brag in the gains tab. You don't take a screenshot down here, put it in gains tab, go grab a coffee, go walk the dog, and we bounce and we're back up here. And now you're at a 60% loss. Okay. Does that make sense, everybody? On SPY, S&P 500. Okay. QQQ, quick recap. As mentioned earlier, I like QQQ better, slightly better, because it's going to open, at a decent spot. But again, if it opens, I'm kind of contradicting what I just said. If it opens below it, I'm looking for price reaction here. If it opens over it, I'm looking for a bounce, retest. I'm getting bullish for would be a glorious bullish trend day to that 518. Who knows? Maybe we only get to 514 or 16. I don't know. But 511.45, you guys on QQQ, mark that, because we can see didn't quite get there last week with that big reaction. Larger time frame charting is the key to your success, you guys. SPY, QQQ, any questions, you guys, before in the chat? I appreciate you guys all being here. I really do. Again, if you swung puts, you're going to be up huge and you're going to be feeling good. So congrats if you swung some puts. But you guys have it. Make sure you have a stop loss every day, each and every day. Have a plan, because again, every tweet, every news drop, it's going to move the market huge. We've seen these huge swings on when they announce tariff news. Like, again, I think this was like just the press secretary on Friday. I was watching it, but I didn't have the markets open or the charts open. And a reporter asked again about tariffs, and she says, yes, something to the effect of, I think, they're going into effect this weekend, or he is falling through with that, and boom, market sold. So pay attention to the news. When the White House does their press briefings, there's several people on Twitter to follow. What's his name? Bloomberg, or Walter Bloomberg. He's pretty much the fastest to tweet news out when it comes out, meaningful news. And so pay attention to that, you guys. There's a lot going on. So have stop losses, have a plan. Maybe this breakout looked good and then the news came out. Like, don't beat yourself up, you guys. Like, with all this tariff news, it's going to be a tough market to navigate. So size down. If your position size is like 7, 8, 9, 10% of your portfolio, size down to 5%, size down to 3%. The money is not as sexy, it's not huge, but it's safe. You guys don't want to blow your portfolio. Buy some time. If you have a larger portfolio, like, you don't have to trade 0 DTs. Like I would say, just because they're available, don't take them. Like we talked about this level here, if it looks like it wants to bounce, get a Wednesday expiration or a Thursday, because you can sit through a little bit of a dip here and sit through 5 to 10% red. But if you're in 0 DTs and you buy them here and we come down to here, these wicks here, you might be staring at like a 40% loss. And, you should be cutting that, even though it's at support. Like that's a big loss. But if you got time, you can chill, you can be a little more relaxed, and you can hold through, potentially this little pocket here holding for support, hypothetically. So buy some time, you guys, on your contracts. That is your insurance. I know it's going to be more money, but that is literally your insurance. That's why you're doing it. I don't have to be right in 5 or 15 minutes. I want to be right today or tomorrow. And that's why I bought Friday contracts, for QQQ calls, whatever. So with that, you guys have a great night. My DMs are always open. You guys send me a DM, say, hey, I'm charting this. Does this look good? Or can I get your opinion on some charting? I'm not going to chart it for you. I'm going to make you, try a little bit and then guide you along the way. I never want to spoon feed people, but I'm always here to help you guys. That is literally my role in this Discord, is to help people as I can. So send me a DM, or if you send it to the charting tab in our Discord, be sure to tag someone. Don't just say, hey, can someone look at Apple? Because if you don't tag anybody, we're not going to be able to see that. So with that, you guys have a great night, and I will see you all tomorrow.